Hi guys, welcome to this Money Control live stream. It's a Friday morning and weekend is knocking at the door and you're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about all the cues for trade, all the stocks in focus, and of course, we'll also be getting all your stock-related queries answered by your expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will take them up. But as usual, let's take a look at the top headlines at this hour. Well, Wall Street snaps a 4-day winning streak with the Dow Jones, in fact, and the S&P 500 closing lower, while the Nasdaq, in fact, ended with gains. Key indices also posted their first monthly loss since the month of February. Meanwhile, in key economic data, personal consumption expenditure comes in line with Fed estimates. Asian markets edge higher after China's manufacturing activity unexpectedly grows in the month of August. Caixin manufacturing PMI comes in at 51, much higher than expectations. Chinese and Japanese markets gain in early trade. However, the GIFT Nifty is implying a negative start for the Indian market. Oil continues to rally. In fact, Brent crude has risen to nearly $87 a barrel, led by a larger than expected reduction in US crude inventories. The high likelihood of Saudi Arabia extending voluntary production cuts also supports prices. India reports 7.8% GDP growth in the first quarter, slightly below the RBI estimate of 8%. Agri growth disappoints while services sector growth remains below pre-COVID levels. However, private consumption and gross capital formation remains positive. Lots of stocks to watch out for today. Autos will be in focus as they report their August sales figures. No fireworks expected there. JIO Financial, meanwhile, exits Sensex and BSE indices from today. Vedanta will be in focus after George Soros-backed OCCRP says the company ran a lobbying campaign to weaken key environmental regulations during the pandemic. Also, watch out for Five Star Business Finance as there's likely to be a block deal today. Well, without any delay, let's bring on board our technical expert and ask him about what the setup is looking like for the markets. Nilesh Jain of Centrum Broking is joining in this morning. Good morning, Nilesh. August series expiry was weakish, below that 19,300 mark. In fact, in the August series, we lost over 2% or thereabouts, and September is historically, a pretty stormy month for the markets. But, speaking specifically about today, are we expected to kick off the September series on the back foot?
Very good morning to you, Nandita. As you rightly mentioned, the September series was slightly on a lackluster note. After a gain of almost last 4 consecutive series, this month has a little bit disappointed. So August series, in fact, that was a lackluster. We expect a slightly a positive and a better series in the September month. Now, looking at the overall setup, if you look at yesterday's candle where Nifty formed a bearish candle on the back of a monthly of an expiry, and even if you look at the Nifty and Bank Nifty expiry data, the rollover was slightly lower in terms of compared to 3 months average. Nifty rollover was 78%, Bank Nifty were at 77%. So looking at the overall setup as well, we can expect on immediate basis some more downtick to continue. And on the lower side, the immediate support now comes around 18,800. So going forward, that is likely to be tested. And that's exactly a 38% retracement of the entire rally that we saw. So overall, for the day, looking at the global market, we can expect a positive start, and Nifty is likely to oscillate in the range of 19,200 to 19,350, and the broader range is still very much intact of 19,000 to 19,400. Cluster of resistance is placed near about 90,400, where 50-day moving average and 21-day moving average are currently placed. So we need a decisive breakout above 90,400 for any positive move to continue. But as of now, the trend looks slightly on a negative side.
All right, the setup is slightly on the negative side. With that, Nilesh, hold that thought. We'll come back to you and discuss specific stocks. But let me also bring on board our fundamental guest for today, Siddhartha Khemka of Motilal Oswal Financial Services, joining in this morning. Good morning, Siddhartha. Good to have you on the show as always. Let me first take stock of the GDP figures that came out yesterday, slightly below the RBI estimates of 8%, but nevertheless at 4-quarter high. Services sector is strong, but manufacturing has lagged and agri growth has been below expectations as well. So going forward, where do you expect, the Indian economy to head from here, and the market impact, given the fact that FMCG and autos, the recovery, in fact, hinges on rural demand picking up. But given the fact that monsoons have also been subpar from June to August, where do you expect these companies to head going forward?
Yeah, so very good morning, Nandita. Thanks for having me on your show. If you look at, I think the GDP numbers came in at a four-quarter high, 7.8%, very strong numbers. This was in line with the market expectation of 7.8% and much higher than our expectation of 7.2%. Some of them might say in the street that RBI was forecasting 8%. So I think it is more or less there. And as you rightly said, the growth was led by private consumption growth, which is good for some of these listed peers that we see in. And investment growth too has been robust. There is some sluggishness that we are seeing in the agri side, and monsoon has been a pretty sluggish. If you look at the prediction for August was a bit on the lower side, and now September the IMD is saying that monsoon should recover and we should be within that normal range of plus to minus 10% long period average. So overall, we believe that GDP growth remains robust, led by higher domestic demand. The consumption as well as the investment provides cushion to the overall GDP growth. There is some worries in regards to the exports, especially if you look at on the production side, services sector remained resilient, but the industrial activities, which is the core industries, their growth was slightly lower. Overall, we are expecting strong growth. If you look at corporate earnings, Q1 was pretty strong. The year started on a very healthy note after almost 22% of annual CAGR FY20 to FY23. The Nifty quarterly earnings for Q1 was a very strong at 32%, and this is on back of 18 to 20% growth that is expected for this financial year. And one of the biggest factor contributing apart from the recovery in growth is the fact that margins have recovered sequentially in the last couple of quarters. Raw material prices have come down, commodity prices have come down, and this is where the concerns are increasingly coming up with inflation now inching up both in India and in globally. So global setup has been pretty mixed, or you can say a bit on the negative side, with growth concerns, with the Fed talking about further aggressive rate cut, and the US economic data not pointing to a pretty good, healthy state. So global cues have been pretty, in that sense, a bit on the negative side. Domestic cues so far has been pretty good, and I think market is hence expected to consolidate after moving up. If you look at last 5-6 months, we have seen how the overall Nifty has moved up almost 11% from its lows, and 11 to 13%. And after that, now we are expecting some consolidation in the Nifty. Broader market continues to do well. We have seen a lot of action there in terms of block deals, in terms of IPOs, in terms of number of demat accounts that have opened. These are all showing to a steady momentum in the broader market.
Right. I also want to get your thoughts on automakers, auto stocks. The sales figures will start trickling in today. No fireworks expected. But, of course, Maruti has hit a fresh record. Four-wheelers, what's your outlook there? And what about two-wheelers? Of course, in the premium bike segment, we've seen competition heat up. But exports remain a pain point where two-wheelers are concerned. So from the entire four-wheeler pack, thoughts on Maruti, and the two-wheeler pack, which stock is looking attractive now?
Yeah. So, Nandita, if you look at the overall passenger vehicle segment, as you said, this month of August, we don't expect a big fireworks. We are expecting the passenger vehicle segment to witness 5 to 7% growth for the month of August, mainly on back of the execution of order backlog. The moderating supply issues have also helped contributed in this growth. For Maruti, we are expecting a stronger than industry growth at 11%, and that is what you are seeing is kind of reflecting in the stock price. The company has launched some of the refreshed models that is helping it gain market share in the mid SUV segment, which is kind of heating up in the market, that we saw huge demand and some of the competition eating away the share from this particular segment. Apart from that, if you look at so Maruti continues to do well. There has been a long consolidation in the stock price, and hence valuations have become comfortable now. So we believe the stock could do well. We are seeing the momentum, and we expect the momentum to continue. We have a target price of 11,150, which is kind of another 10-11% upside from current levels. In the two-wheeler space, yes, there is export concerns. There is increasing competition from the EVs. We have seen every company now focusing on the emerging space that is EV. So be it TVS Motors, be it Hero, be it Bajaj. But this is where TVS is taking a big lead in the EV, the electric scooter segment, and we are witnessing strong growth there. Within the two-wheeler space, we would prefer something like a TVS. The overall business growth is decent, plus the faster penetration in the EV provides good growth opportunity in the future.
All right, let's also talk about the realty space now. Mumbai-based realtors will be in focus given the fact that Mumbai property registrations have come in at a 10-year high. The likes of Macrotech, Godrej, all will be in focus. In fact, even Jefferies has come out with a report where they've said that they expect a lot of launches from in the real estate space ahead of the festive season. Particularly for the Mumbai-based realtors, which stocks would you prefer now? We have Macrotech and the likes.
Yeah, Nandita. So Mumbai saw almost over 10,000 properties being sold in August, which is a 23% increase on a Y&Y basis. It collected a stamp duty of 790 crores, which is again about 22% of growth. This is the third consecutive consecutive month of over 10,000 property registrations in Mumbai, and kind of shows that after despite the interest rate hike cycle, and that is a big negative that we had seen that impacted at least sentimentally on the real estate stock prices. Now with RBI taking a stance of keeping the pause on interest rates, we are hoping that by the end of this year or early next year, we'll start seeing the interest rates coming down. Nonetheless, there is a strong demand that we are seeing especially in the Mumbai region, and that is something that is definitely helping some of the Mumbai-based real estate players. So we like Lodha, we like Godrej Properties, we like Oberoi, but within the three, our preferred pick would be Godrej Properties. The company has launched 3 projects with a saleable area of 1.1 million square feet in Q1. It is on track to launch almost 19 million square feet of projects in the remainder of FY24. So I think that is one company which has seen some consolidation in the past. Valuation had run up, and then after the consolidation, valuations are attractive. It is in the good space, witnessing a strong demand and has a good pipeline. So again, here we have a target price of 1915, so 1,915, which is a good, decent 15 to 18% upside from current levels.
All right, that's the view on Mumbai-based realtors then. But with that, Siddhartha, we are running out of time. Thanks a lot for taking out time and joining in this morning and sharing your thoughts with us.
Thank you so much.
Coming back to Nilesh then. Nilesh, let's talk about 5-star business finance. There's likely to be a block deal in the counter today, according to sources. A clutch of PE giants are expected to sell somewhere around 8.5% stake in the counter, and the floor price has been set at 724 rupees per share, which is at a 6.5% discount, nearly a 6.5% discount to its current market price. What is the kind of trade that you're spotting in this stock? Some bit of selling pressure would come in today, but near term, how should one trade into this counter?
Nandita, the major structure continues to look on a positive side. We have seen a strong reversal yesterday as well. A bullish candle has been formed on a daily time frame chart. Now, today on the back of block deal, we might see a knee-jerk impact, maybe a small dip. So that could be a good opportunity to get into this particular counter as long as fresh entry is concerned. And the major support is now placed at 680. So that should be the stop loss. If at all, if somebody is buying in the range of 700 to 725 or 730, then a stop loss should be placed near about 680 to 670 zone. On the upside, we expect a positive move to continue towards 800 and 850 mark in the near term.
All right, 8,850 is the kind of level to watch out for. I beg your pardon, 850 is the kind of level to watch out for on 5-star business finance. But let's talk about Genus Power. This stock has, in fact, this company has bagged an order worth 2,200 crore rupees, a smart metering order rather. So we have a query coming in from Debu K, who wants to know your thoughts on this stock. Now, these stocks like Genus Power have been in focus given the fact that they have been winning orders consistently. Would you advise investors to buy into it at the current juncture?
Looking at the major structure which has been in an uptrend, and if you look at in last almost 4 to 5 months, the stock has outperformed, and it has been a multi-bagger counter. Now currently it is trading near about 258. I would rather stay put in this particular counter. The upside is very much open for 280 to 300 sort of levels in the near term, and one can keep a trailing stop loss below 235. If somebody is looking to make a fresh entry, I would rather wait for some sort of a decline to get into this particular counter, keeping stop loss below 235 for the upside target of 280 to 300 in the near term.
All right, that's the view on Genus Power then. Let's take up a query on Mahindra Financial as well. This one is coming in from Rajiv Sharma. Wants to know the near-term outlook on this stock. I think over the last 1 month or so, it has not done much, Nilesh. But in the 6 months, it has given a decent 18% kind of returns. Would you expect this counter to head towards the 52-week highs anytime soon? 347 or thereabouts is the 52-week high for the stock.
If you look at the structure, that is looking slightly on a positive side, although we have seen some amount of correction, and that is again giving an opportunity to make a fresh entry in this particular counter. The major structure, as I mentioned, is looking positive for 340 to 350 in the near term. So one can stay put, keeping a trailing stop loss below 275. That's the immediate support that I can see on the chart. And on the upside, if at all we see any decisive breakout above 310, that will open straight up to 340 to 350. That's the previous all-time high level mark. So overall, the structure is looking very much positive. One can make a fresh entry at current level as well.
Right, hope that answers your query on M&M Financial. But let's take up a query on Boral Renewables. This one is coming in from Peter William. Wants to know whether it's a good time to buy into this stock. Now, this stock has been in a steady downtrend, down 13% in the last 1 month. It's quite a quite far away from its 52-week highs right now. But would you advise investors to use this dip to buy into this stock?
First we need to look at the major structure that is indicating a downtrend to continue. Now, we have already witnessed a good amount of correction of almost 13% in this month. There could be possibility of a small pullback or a relief rally, but I don't advise to get into this particular counter looking at the major structure, which is indicating a negative structure. And stock may seems to be heading towards 400 sort of levels on the lower side. So I would rather, stay out of this particular counter. There is no clear trend on the upside. If at all this particular counter breaks above 500, that could be a good opportunity on the breakout. One can buy, but at current level, it is better to stay away.
Better to stay away from Boral Renewables. Hope that answers your query. But let's also take a query from Marcus. He wants to know your thoughts on United Spirits. Stock has been holding on to that 1,000 rupee level, but over the last 1 month, it hasn't been doing much and giving a negative returns for the last 1 month at least. What's your thought? Retest of 1,050 levels going forward?
That seems certainly on the card, but before that, we might see some sort of a correction. And looking at the overall structure, it looks slightly overbought at current level. I would rather wait for some decline towards 950 to 960. That could be a good entry point. And if somebody is already holding the long position, keeping a time horizon of more than 8 to 10 months, I think one can stay put for the upside target of 1,050 to 1,100. Although the major structure looks positive, but there could be possibility of some short-term decline in this particular counter. The support is at 950.
All right, support at 950 for United Spirits. Let's talk about HDFC AMC. There's a query coming in on this stock as well from Ashok Kandukuri. Wants to know your thoughts on this stock. It did see some bit of action yesterday. Quite volatile, but managed to end towards the day's high, so to speak. Last 1 month, it hasn't done all that well in a downtrend of sorts. What should be the strategy here, HDFC AMC?
Yesterday we have seen good amount of volume. In fact, it looks like historically highest volume was seen yesterday of more than 1 CR. If you look at the overall structure from past 1.5 months, the stock is facing multiple hurdle near about 2600 marks. So it is facing a hurdle at 2600. We need a decisive breakout above the same. So looking at the overall structure, we can expect further follow-up move to continue going forward. So one can stay put in this particular counter, keeping stop loss below 2400. The upside is very much open for 2700 to 2800. Although watch out for breakout level, which is placed at 2600.
All right, that's the view on HDFC AMC. Hope that answers your query. But I also want to get in your thoughts on Vedanta. Nilesh, this stock is down 30% from its all-time highs, and even though metals as a pocket have been doing well, this stock hasn't really participated. And this morning there is some bit of a negative news flow when it comes to Vedanta. George Soros backed, OCCRP has alleged that the company has in fact ran a lobbying campaign to weaken the key environmental regulations during the pandemic. Do you see more downside here on Vedanta, and should one really steer clear of it now?
Absolutely. You rightly mentioned this has been one of the underperformers from the metal spec, and given the fact that it is already down 15% in this month, and it is on the verge of a major breakdown. So another breakdown is awaited, which is placed at 230. So if at all we see Vedanta closing below 230, that would be again a negative sign, and post then we can expect it to move towards 210 to 200. So overall, it is better to stay away from this particular counter as far as long positions are concerned. On the break below 230, one can go short, keeping stop loss above 235 for the downside target of 220 to 210.
All right, that's the view on Vedanta. Couple of more queries I want to take up. Midhani, Vivek Kurup wants to know what to do with this stock because he has 1,000 shares at the rate of 419. He wants to know should he hold on to it or should he exit. He's making a bit of a loss here. 410 is where Mishra Dhatu or Midhani is trading at right now. Would you advise him to take losses or just keep invested in the stock?
This particular counter has given quite a bit of run up in last 5 consecutive months. So from the levels of almost 180 to 410. So now usually it is better to avoid taking any long bet at the overbought territory. So currently it is in the overbought zone, but it looks like it has somebody has bought it from trading point of view. So one can keep a strict stop loss below 390. As far as momentum is concerned, we might see the levels of 420 to 430. If somebody wants to hold it for a little longer term perspective, I think the stock is getting ready to move towards 500 zone. But there could be possibility of some short term correction. One should utilize those correction to get into this particular counter. At high level, it is better to stay away from this particular counter. And I think one can keep a strict stop loss as of now below 390.
All right, stop loss below 390. That's the view. I hope that answers your query. But let me take up a query on JIO Financial. Of course, that will be this stock will be exiting Sensex and BSE indices from today. We have a query from Shyam. Wants to know what should be the strategy on this stock now. Recently listed, but anything that you are advising investors to do with this stock, JIO Financial?
So if you look at the structure, we have a very limited data due to the recent listing. But what I can see is that it has formed a good base near about 205 to 210 zone. So ideally, the fair value that comes around 240 to 260. So that is the zone where the fair value is coming. So any decline from here in the zone of 220 to 210, that could be a good entry point. At high level, in the zone of 250 to 260, we might see some distribution and profit taking. So from short-term point of view, I think the news flow has been over, and we can expect some consolidation in the broader range of 210 to 260. Any decline could be a good opportunity to get into this particular counter from little positional point of view for the upside target of 260 to 250 to 260.
All right, that's the view then. But let me take up one last query for today. KRK Rao wants to know your thoughts on IDFC First Bank. Of course, due to the MSCI rebalancing, some of these stocks saw some heavy action in the last hour of trade yesterday. The stock was up somewhere around 3% or thereabouts. How should one trade into this counter? What should the trading strategy be when it comes to IDFC First Bank now?
From last almost 1.5 years, this particular counter has been in a secular uptrend, and constantly we are witnessing a buying interest getting emerged on the lower side. So looking at the overall broader structure, it looks like this particular counter is heading towards 100 to 105. That should be the short-term target. And it is advisable to buy in a staggered manner, keeping stop loss below 85. Any decline could be a good opportunity to get in this particular counter. Yesterday, we have seen a good price and volume breakout. So the stock is getting ready for 100 and 100 to 5 in the near term.
All right, that's the view on IDFC First Bank, but that's all the time we have for the query segment. But before I let you go, Nilesh, any stock recommendations for viewers this morning?
Absolutely, Nandita. So yesterday we saw good action in mid-cap and small-cap IT. So we are still watching out for the IT space. So Coforge is one counter where we have seen a fresh breakout, good rollover data we have seen. Yesterday, we have also witnessed a build-up on the long side. So structure is indicating this particular counter is heading towards 5550 to 5600 in the near term. One can keep a stop loss below 5360. The another counter that we are liking is Titan. So Titan, in fact, this particular counter has given a good rebound in the month of August so far. And given the fact that yesterday we have seen a fresh breakout, the stock is heading towards 3150 to 3200 mark on the upside. One can keep a stop loss below 3060. And apart from that, lastly, Voltas is another counter where we have seen a lot of underperformance in last few months. So August series so far has been good for Voltas. It was up close to 11.5%. So given the consolidation breakout yesterday, I think this stock is getting ready to move towards 900 to 950 in the near term. One can keep a stop loss below 850.
All right, so those were the stock recommendations coming in from Nilesh. With that, Nilesh, thanks a lot for taking out time and joining in this morning. It's always a pleasure chatting with you.
Thank you, Nandita.
Well, with that, we've come to the end of this edition of Morning Trade. So from me and the entire team, thanks a lot for watching. But don't go anywhere, because coming up next is Opening Bell.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.